Greetings. This is the first video regarding cost behavior. Here we will discuss basic definitions regarding what is cost behavior and how it is a useful managerial accounting tool. These concepts can be found in Chapter 3 of the textbook on pages 66 to 115. Cost behavior is considered to describe how a cost changes when its output changes. Generally, there are two ways to describe cost behavior. First, there are fixed costs. These do not change as the output changes. On the other hand, there are variable costs. These do change. They increase when the output increases, and they decrease when that output decreases. Before we go further into describing fixed and variable costs, I will discuss another concept. This concept is called a cost driver, which is something that is a factor that measures the output and leads to why the costs change. For example, the cost of apples during September, the reason that apples, the food, would change could be a cost driver, could be drought, because there will be less apples being, and the output of the apple trees would be less. Next is considered to be relevant range. This is the range of output that is used to determine the cost behavior under normal conditions. Now we are going to look at the previous mentioned fixed and variable costs, as well as another called mixed costs. Regarding fixed costs, the costs are constant or remain the same within the relevant range of output, even if it decreases or increases. For example, a CD making company makes maximum for output a total of 50 CDs per year, with a minimum of 5 CDs per year, with a range of usually either 10 or 25 CDs for an output. However, in order to assemble these CDs, it takes a overseer, or like a production overseer, $50. So no matter how much the output is, it's going to be $50. The $50, which is the cost of the overseer supervisor to create the CDs or make the CDs, is always going to be $50. Therefore, it's a fixed cost. When you talk about the unit cost, for 5 CDs, it'd be 50 divided by 5, which is equal to $10. It'd be 50 divided by 10, which is equal to $5. There's 50 divided by 25, which is equal to $2. And 50 divided by 50 is equal to $1. As you can see, the unit cost changes with the output, but always the cost of supervision or the overseer always remains the same. There are two main types of fixed costs. There are discretionary and committed. All fixed costs. Fixed costs that are discretionary can be changed. And the symbol over here, delta, is a delta, Greek for change. For example, when a manager decides how to package a product, they can choose whether to use for example, let's say it's a doll. They could choose whether to use different types of plastic, different types of wrapping. The extra layers instead of what is needed can be described as a discretionary cost, because you don't have to incur these costs for these extra lavish wrapping if you don't want to. Committed fixed costs are things that cannot be easily changed, and these are things such as those that involve long-term contracts. For example, a committed cost would be the cost that it takes for a company to pay for electricity. This is a fixed cost. It's going to be for a certain amount of electricity used. However, you can get rid of the long-term contract of an electric provider, and usually there's only a certain amount within an area. As we go back to variable costs, they will vary in output within the relevant range. Also, more importantly, total variable cost is equal to variable rate times units of output. In the examples that I will use in the next video, and in this video, we are dealing with linear relationships. Therefore, the variable rate in a lot of the problems will always remain constant. The last type of main types of cost is considered to be mixed cost. These are considered to have both part of variable cost, which will change, and a fixed cost, which will remain constant. In order to calculate a mixed cost, the total cost is equal to total fixed costs plus total variable cost. Notably, one of the most common types of mixed costs are cell phone bills, which will have a fixed rate, let's say like the usually monthly charge, and perhaps a data charge, which will be variable based on how many minutes, how much data you use. And also sometimes voice and minutes can be variable based on how much voice data if you go over the limit. However, mixed costs can be confusing, especially when they have a type of a fixed cost plus a variable cost. One of the main methods of separating mixed costs into their fixed and variable components would be the high-low method, which uses geometry and slopes to create basically a line. However, this can also be applied to managerial accounting concept, where the Fixed and variable costs are separated into high and low data points to determine the variable cost per unit. And in order to determine the variable cost per unit, you separate into the high cost subtracted the low cost over the high units minus the low units to get this. So basically the difference between the high cost, the cost, and high and low versus the units. However, this can be also described in a algebraic format. In the high-low cost unit, you think of the high cost is equal to y2. The high unit is equal to x2. Low cost is equal to y1. And low unit is equal to x1. If you remember the whole difference in the slope format, which is equal to y2 minus y1 over x2 minus x1, which again gives you the variable cost per unit. And if you think about it in a graph, where the cost right here in money versus the unit, where you have x1, y1 as the low cost right here, then you have x2, y2. Also, this can be used to find fixed cost. As you recall from earlier, the high cost minus the low cost divided by the high units minus the low units is equal to variable cost per unit. In order to be able to find the fixed cost in the high-low method, you have the high cost minus the variable cost, or in this abbreviation it's VC, per unit, times the high units, or in algebraic form x2 is equal to the fixed cost. This concludes our first chapter 3 video. And the next video will be the final chapter 3 video on cost behavior, which uses the concepts that we have learned here to complete textbook problems. Resources can be used at ACE and both the Bedford and Lowell Math Center, as well as e-tutoring. Thank you for watching, and please stay tuned.